Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers were pretty active and we got a push back up towards 2014, which was the area where the breakdown really accelerated yesterday. So it's essentially a retest of that breakdown where sellers have been active so far in the Globex session. Bigger picture, we're dealing with a market where the market is quite oversold, and at this point we've seen a pretty decent bounce off of that oversold condition. But at this point, bigger picture, the sell side is in control. So any moves higher from here into either 2014 to 16 or to the next zone at 23.5 to 25.5 can still result in sellers being very active, and ES can potentially fail either right at the 14 to 16 area or at the next inflection point at 23.5 to 25.5. The other markets continue to be relatively weak, and even though we're coming off of this oversold condition, we can still balance in a range before the market either turns around or stabilizes a bit. So we don't necessarily have to put in a V bottom and go straight back up without revisiting some of these lower prices. So we just have to keep that context in mind and be aware that even today we can get some selling in the market, but we are coming off of a oversold condition where the market was quite extended to the downside, hit some pretty decent support, and attracted responsive buyers. So we do have to be cautious on both sides, long and short, because the market can establish a trading range and balance in a wide range, right? So that means that the middle of that range can end up being a chop area. That's going to be the risk in the market, really, is trading the middle of this entire balance, yesterday's range. The edges are really where we're going to find the best trade location, where we're going to have really the best edge in our trades. So, for example, shorting 14, right? The 14 to 16 area, first time up, would be a very good trade. Shorting 23.5 to 25.5 would be a very good setup. On the downside, the middle of the range would be 0175 to 0375. So taking a long over here, can technically work, but it's a riskier trade because it is in the middle of balance, and there would have to be some very decent strength and continuation of that strength in order for a long setup to work off of 0175 to 0375. So that means that if you are taking long at the pre-market support zone, just be aware that you're entering in the middle of that range and play a bit more defense with any long setups that are being taken, in the middle of yesterday's range. It doesn't mean you can't make that work, or doesn't mean that the buyers can't step in there and we can't go higher, but just be aware of the bigger picture and the overall context and play a bit more defense with any trades taken in the middle of that range, and be a bit more patient with trades taken at the ideal trade location towards the edge of the range. So again, 14 to 16 is a very important resistance zone. Beyond that, we could get some acceleration to the upside. So if we break out above 14 to 16, we could see some acceleration up towards, potentially 21.5, or the 23.5 to 25.5 initial resistance zone, and then this is the next inflection point where sellers can be active, and it can result in a all-out failure. On the downside, short-term support in the overnight session heading into the open is 0175 to 0375. A little bit of support at 06. A break below 06 would at least confirm that sellers are stepping in. If we continue to hold above 06 and balance, then eventually, we could get a break, a directional move to the upside if we continue holding in the upper part of the overnight range. But the expectation is for the markets to still break lower and retest and fill the gap from yesterday. So on the downside, 0175 to 0375 is the near-term aggressive support. Behind that, initial support 93.95 is a safer area for buyers to be active, and then the safest area is going to be all the way down to the edge of the range at 83 to 85. At this point, we can still revisit these lower areas, and we can even make a marginal low if sellers really press today. But the downside is also very limited now. There's not really a whole lot of room to go on the downside. NQ hit some pretty major support yesterday, so that market is very deeply oversold. And if it goes back down toward yesterday's lows, or makes a marginal low, then we can get a pretty decent buy response in NQ, and that can coincide with buyers stepping into ES and the Russell as well. So at this point, really the risk is going to be in the middle of the range. The best odds of the trades working out and the best reward to risk is going to be at the edge of the range when the market gets a bit exhausted heading into a support or resistance zone. So again, on the upside, 14 to 16, 23 half, 25 half, and the event of some very strong buying, 36 to 38 may be in play, but it's quite a ways away right now, so it's not really in focus. But if we got some very unusually strong buying, then 36 to 38 is a potential area that can get hit, but that would still be a good short setup on first test, given the level of selling that we've seen over the last few days. First test of every resistance zone on the way up can provide pretty decent edge and is a good short. And our primary focus is still going to be on the short side. Now we can consider longs, but again, the best longs are going to be when the market gets a bit overextended to the downside, and the best area still to go long is near the bottom of the range, 83, 85. 93, 95 is okay if the internals are holding up all right, and we're not seeing too much weakness in NQ, and the other markets are holding up okay. Then 93 to 95, is still a decent support zone, but the better odds are going to be even lower. Or if you can find an intraday pattern to trade, for example, like if we continue balancing and then break out, then that's an independent setup that can work as well. But just looking at the bigger picture and the primary support resistance areas, the best long setups are going to be if the market actually overextends to the downside near 83, 85, perhaps even a bit lower, and then we can get some better buying off of the market getting oversold and exhausted yet again. So at this point, limited downside potential, but at the same time, fairly limited upside potential too. No major economic catalyst. We have FOMC minutes this afternoon, but I don't think that's going to be a major market mover. So overall, expecting the market to consolidate this big sell-off, and that usually means balancing and going sideways in a range. So today could be a very range-bound day. The next major economic report is really the employment report on Friday. We have jobless claims tomorrow. So looking at the econ reports for the remainder of the week, there's not really any major report until Friday at this point. So we could just kind of consolidate and balance for today and tomorrow, and then perhaps get some directional movement, or some stronger directional movement off of Friday's report. So those are really the main ideas heading into the open. Again, keep an eye on 06, see if it's holding above 06. The expectation is for the market to fail and go lower, but if it does start holding, then that gives you a clue that buyers are still being aggressive and stepping in here. So keep an eye on that. 14 to 16, 23 half, 25 half, key resistance. On the downside, 93, 95, 83, 85, primary support. Those are our main thoughts. Let's see how well this plays out this morning, and we'll take it from there.